Okay, so when I say POI, I mean point of interest. Okay, here we can also call it area of value. That is where you are looking to buy or you are looking to sell. Wherever you are looking to buy, all right, wherever you are looking to buy or to sell is a point of interest. It's not only restricted to order block. Okay, like me, the major POI that I use is order block and fair value gap. That is what I trade with. Okay. Some traders, I don't know the mentors that they have. They feel like um it's only order block that is POI. When they hear fair value gap or maybe QML, mitigation blocks, they'll be like, what are we talking about? All right. So other blocks are simply zones that clear liquidity that are usually close to highs and lows. Okay, there are zones that are usually close to highs and lows that clears liquidity. That is how I trade my order block. My order block must clear liquidity for it to be valid. There must be a liquidity that it has cleared, whether in lower time frame or in that time frame. So for example, if I'm looking at an order block, maybe this is my structure now. This is a bullish structure. All right. So your order blocks, they are expected to be around the lows of a bullish trend, of course. Okay. Now, they are expected to be here. It doesn't mean that it is always here that price must come to. Okay. Sometimes price can, like, when it comes here, it taps into this other block, create another one, tap into it, create another one, tap into it before it continues. Okay, such that price can now come here without coming to the bottom to react. All right. Now there's something peculiar about other blocks that most traders don't know, is that some of these other blocks, they are points of inducement. Okay, they are points of inducement. They are not, of course, every other block, they are liquidity zones. They are where people have a lot of orders. They are where people have or OB. They are where traders have a lot of orders, of entries, or of buy entries, of sell entries. So market will always be attracted to where there are chunks of orders. All right, and order block is one of those. Okay, so how did I define my order block earlier? I said they must clear liquidity either by a candle or a structure. By a candle, I mean, for example, if this is a candle now, an order block should clear this low for it to be valid. So price comes back in and boom. So where is my other block? Here. All right. Liquidity cleared. Okay, so this becomes my other block. All right. For example, okay, look at this example now. First, price tap into the what they call it, the fair value gap. Okay, so this is another block by what I just explained. Why? Liquidity cleared by this candle. Okay, cleared by this candle. So that candle I cleared it becomes my other block. All right, so I can now wait for price to tap in, and then you can see the buy. Okay, you can see the buy. So for another block to be valid, it must clear liquidity. That is my own principle. I don't know every other person's principle out there. I don't know. I have no idea what they know. That is what works for me, and I believe that is what most of you know too. It must clear liquidity in order for it to be valid. Look at what I mean. This is what they call it. This is 30-minute view. So this candle that clear liquidity, that whole zone can be my point of interest because there is another block there. Okay, whether it is for buy or it is for sell, as long as the candle have cleared liquidity, it is valid as another block. Okay, but it doesn't mean that because it's another block it must play out. Yeah, the class is being recorded for Mr. Prince. Now, as I was saying, I said it can be a candle, a single candle as another block, and it can be a whole structure. Okay, so that you will not be confused that sometimes the thing will be so many. It can be a whole structure here. Okay, it can be a whole structure, and price will tap into the structure and boom. Okay, so this whole structure can be my point of interest without refining it. This whole structure can be my other block. Why? Because the structure cleared liquidity. Okay, that's why you see some of my trade, for those of you that follow me on Twitter, how I just mark out the whole zone without trying to select the particular block inside. Sometimes you have to do it like that because the structure you cannot really separate it. It is there, but the zone is valid. Okay, the zone is valid, and because the zone is valid, you can take it as a POI. Just like, for example, now what caused this gold reaction, this retracement buy that happened on Friday? Was it in 15 minutes now? Let's check it maybe in 30 minutes. I said I was going to tell you guys about why the first one did not react, blah blah. Where is it safe? Yeah, why here did not react, stuff. Don't worry, when we are treating entry model, you will know why it did not react. Okay, it's a full class. So just like here now, I can mark this whole zone as my POI. Okay, without selecting the candle. You get? Why? Now, if you go to like 15 minutes, you'll be wondering which liquidity did it clear. We can see it clearly here. How price took out this liquidity. Alright. So it is valid for a retracement buy, of course. If you want to buy for everything, no problem. But it is valid for a retracement buy. Okay. Here is another block too, but don't worry, when we reach there, you will know. I'm just introducing them individually now. It's not time for me to be complicating things for you guys. Okay, just like here now, this one too. At least, even if here don't hold, it is expected to react. Okay, that is why as a technical analyst, if you have a point of interest, if your point of interest don't react like 90% of the time, there's a problem. It means you need to learn more about POIs. Like this zone now, why is this zone? Why am I marking it as valid? It cleared liquidity. So even if price is going to take this low, it must react. Price will not just pass it easily. Okay. It's the same way you can see here what happened here. This is a valid order block because it cleared liquidity. Okay. There will always be liquidity at the back of every other block. You can see how price tapped in and it caused this kind of buy. Now, this kind of buy can pursue people from their sell. Some of you that are in this class now, if you are on this sell and you see this kind of buy, I know some of you will run. Sorry. So let's check for some sell POIs. We've talked about buys enough. Okay. I feel like even sell order blocks are even more aggressive. Sorry. This is a valid block because it cleared liquidity. Some of you will be like, is it the bearish block or the bullish block? Me, I don't do bearish or bullish. As long as the liquidity was cleared in that zone, I identify that zone. Alright, I identify it as a valid one. Whether I'm selecting the candles doesn't matter. Those are YouTube knowledge. Okay, those are YouTube knowledge. Just like this one. Even in a bearish structure, it still reacted. Even in a bullish structure, it still reacted because it cleared liquidity. You can see how price it cleared the high of the candle. You can see how price came back in and it reacted. Okay, this is another block. Okay, where you want to buy or you want to sell from. Some of you may say, okay, YouTube knowledge teaches you that you just clear a particular candle low or a high. It's not always about that. There have to be an obvious liquidity taking. That is my own theory. I don't know about the one that you've learned from. I don't know about the one you've learned. That's my own theory. Okay. Now, to make these other blocks high probability. Of course, there have to be a liquidity close to it, as I've taught you guys, inducement or engineered liquidity. One of the things that invalidate other blocks are when there is fair value gap below it, if you are buying, okay, or when there is fair value gap above it, if you are selling, okay. That's one. Secondly, the other block that is formed did not mitigate the preceding or the former, or which English should I use now? For example, now if we have another block here like this, maybe this is another block, okay, and we have another one above, still clear liquidity. What will make this one to fail is if it did not tap into this lower one, okay. We'll go into that. So the fact that it is another block, it doesn't mean it must automatically play out. There are still some principles you need to observe, okay. There are still some principles you need to observe. Right now, I just want you to know that, okay, this is what I call an order block, okay. Another point of interest is the fair value gap. Of course, I've talked about the fair value gap before. I've taught you guys how to identify it. Now, the fair value gap, listen, you guys need to, as you are learning right now, I don't know how you guys are going to do it. You have to do less of limit entries and do more of market executions, okay. Market execution helps you to be as flexible as possible. All right. Now, if you have two fair value gaps, two zones of a fair value gap, and both don't have liquidity. Let's say you have a candle here, and then another candle, and these two candles, they both have fair value gap. So there's a fair value gap here, and there's a fair value gap here. There's a fair value gap here. Now, if there is no obvious inducement or engineered liquidity at this first one, price will use this first one as the liquidity and come for the second one, okay. So let's say price is coming up like this and price is coming to tap in without inducement. This is where you should look at. Sorry. This second one is the one you should look at first. Let me show you guys what I mean. If there is no inducement or there's no liquidity, there's no engineered liquidity, and there are two fair value gaps like that, and you don't know which one to pick, go for the lower one first. Look at an example here. I took this buy. Was it on Tuesday or Wednesday? Now, if you look at these two fair value gaps here, I told you guys it's small. You guys will learn. Now, this one is not YouTube. It's not YouTube knowledge. This one is from experience. It's from experience. Look at that. So if you have a case like this and I want you, which fair value gap should I now use? And there's no liquidity. You can see that there's no liquidity here, no engineered one, nothing. You can see how price use this first one. There are many people that are going to buy here. So we'll first clean those ones off first before we come for this second one. Alright. That is if price is going to use fair value gap without obvious inducement or engineered liquidity. You can see even this is a ranging market too, and price is still respecting that. Look at this. These are some of the things that you learn from experience, from mistakes, from losses. Market is going, market just tap in. Market is going, and you want to rush in. You've taken one loss, two losses, three losses, four losses, and begin to observe like, What am I always doing wrong with these fair value gaps? With your observations, that's why I always tell you guys that you guys should keep records of your trades. It's the only way you can learn things like this. You can see how price came all the way to the second one because there's no obvious liquidity play here. But in a situation where there's obvious liquidity play, it will use that following one that is close to. It's just like this one now. You can see this one. Obviously, an inducement is here. You can see how price just used this immediate one and continued and sold. Because there's an obvious inducement. Please pay attention, no, because I know some of you will still come and ask this question later. I'm taking my time to explain now. So when next you are choosing a fair value gap, know what you are doing, know what you are choosing. This only happens when there are more than one fair value gap. Okay, what happened here is a lower time frame inducement play in 5 minutes. I mean engineer liquidity play in 5 minutes. That's why price used here. Let's go to that 5 minutes and you see. And in an aggressive trend, like we'll come to that. In an aggressive trend, price uses fair value gap more for continuation. In a ranging market, price uses order block more because it's common sense. Okay, in aggressive trend, everybody want to join at the nearest place, so you can't afford to go and be waiting at extreme. You understand? So that's just the common sense behind that. While in a ranging market where everybody's bored, you can't just say you want to be rushing into until the big players are done with what they are doing. You cannot enjoy. You can't enjoy that market. So look at what I'm talking about right here. This is engineer liquidity. So this is a fair value gap right there. In 5 minutes. I don't trade 5 minutes, but I just when it happened, I had to go to 5 minutes to go and check what happened here. This is an obvious engineer liquidity play. Why? When price came close to the fair value gap, it retraced all the way up, but failed to take out this high. You can see how it retraced, or failed to take out the high, then came all the way down to tap into the nearest fair value gap. So why did this fair value gap react? Because a liquidity have been formed before it. Take notes, please. I don't want you guys asking me questions regarding this like I've not taught it. Please pay attention. I'm begging all of you. Okay, let's move to our normal time frame. 30 minutes. There's more I want to show you guys. So you can see what happened there now. Price just tapped in and then flew. So yeah, because some of you, of course, you've been asking me how do I know the right fair value gap to choose? There is no inducement play yet, or there is no engineer liquidity play yet. So pick the one below it first, or the second one. I don't know if you are selling, the one above it. If you are buying, the one below it. Okay, pick that one first. So if price later, you can see what happened here. Look at this. If price later engineer liquidity above the one you want, okay. If it doesn't, that's your second one remains. Look at this. This is a fair value gap. This is the first one, right? Some of you will buy here, even without liquidity. This is the second one, right? So if you pick this before, you are waiting for engineer liquidity, or you just pick it, you just enter. is your fault, because I did not tell you to be picking fair value gap without an obvious liquidity play. So you can see this is the first one, this is the second one, right? Good. So what happened? Price came all the way down to the first one, I mean to the second one, and engineered liquidity. Now, some of you will see my trade and be like, engineered liquidity plus 30-minute fair value gap, engineered liquidity plus 30-minute fair value gap. It's not by limit order, it's by market execution. I've identified the fair value gap. I have to monitor the chart to know when price comes into the fair value gap that I want to take. Now, if this fair value gap, if price had engineered liquidity above here, there's nothing that would have stopped me from buying here. But since there is no obvious liquidity yet, I have to wait for price to direct me, like to show me the one to use. Okay, look at this. This thing is not magic. It's just, you guys should study. This is from personal, from grave losses. Like when you've lost enough and you know that or more, you need change. Then you begin to identify your problem and you begin to see solutions to them. So your stop loss should always be below the low of the candle that created the fair value gap. Okay, your stop loss should always be, for example, now if I'm buying here, my stop loss must be below this, the low of this candle. It must be a must, no matter how wide or how whatever it is. Here you can see an obvious, of course, this is a inducement play. This is just one this is one fair value gap, so you cannot come and be saying I don't know the one to pick. This is a fair value gap, full one. And of course, price created inducement, took it out, and then bought. What I've been stressing on is on two, if you have two without inducement. So that is that for that. Now, another thing that I would like you guys to know is mitigation blocks. Although I don't really do mitigation blocks too much. I barely do. I prefer to just use my other blocks and fair value gap for, I mean, after price I've used mitigation blocks, I can take my continuation and we move ahead. But I also want you guys to know mitigation blocks for some of you that may be interested in it. When price fail, in fact, for you to trade in mitigation blocks, you need to know where price is going to first. It's like a continuation of a trend. Yes, there must be a trend, an established trend already, whether it's a lower time frame or a higher time frame. Okay, for example, now market is, you are expecting the market will come for this low. For example, our market have taken out this, sorry, the market have taken out whatever I want to take out, these liquidities, and it's selling down. Now, as it's selling, the buy point of interest that fails, it's just like support and resistance, break and retest. Okay, the buy point of interest that fails, price will now come and use it to sell. Okay, like this buy now that failed, price will pass it, then you can come back to it to sell. So normally this is like break and retest. That is how mitigation blocks are. Okay, so like prices going up and then this sell could not hold it, price can come back to it to use it to buy. That's basically mitigation blocks. But notwithstanding, there must be an inducement or engineer liquidity play. Okay, gold uses it some of the time. Now, gold don't necessarily use breaker blocks. Okay, breakers are after price, I mean, the point of interest, the nearest point of interest to before price reverses. Abi, yeah. But gold have made me to rule out breakers entirely, because gold don't even use breaker most of the time. It just uses, like for example, now as price came all the way here now, to just use a point of interest that is close to where um so it's not like the traditional breaker block knowledge. Okay, look at now, you are calling this a breaker block, when nothing has even broken, no structure have broken yet. So you can see that gold don't originally use breaker block traditionally. It just uses like, it's like a narrative. All right, it's like a narrative. But mitigation blocks, for sure, gold uses mitigation blocks a lot. You can see how gold used it here. Gold used it almost all the time for continuation, even in higher time frame, like 4 hours. I think there's a time that gold used it for retracement. Mitigation blocks are blocks that fails, then price comes to use it for the opposite direction. Okay, like if you are seeing breaker blocks happens before a trend change. Mitigation blocks are just continuation of the trend that is already established. Okay, for example, breaker blocks before a trend changes, breaker blocks, while mitigation blocks, continuation after a trend have been established. For example, now this block now. Okay, now originally this is a fair value gap. Most breaker blocks are like that. I mean, most mitigation blocks are like that. There will always be a fair value gap at the other side or in the middle. All right, so most times you will see, if you trade fair value gap well, you will trade breaker block without even knowing. I mean, you will trade mitigation block without even knowing. All right, here I was waiting at my um fair value gap here. Those that trade mitigation blocks, everybody, we all made the same profit. Okay, so here, what happened here? It failed to react and then came back and boom. So look at what I was talking about here. Okay, it's just like support and resistance. Broken resistance, flip to support. That is basically it. That is how it is. There's no other language for it. Okay, but of course there must be an inducement or engineer liquidity play. Take note, please. They are basically just broken support, turn resistance, broken support, turn resistance, broken support, turn resistance. All right, broken support, turned resistance. This one, using 50% of fair value, Mr. Imam, using 50% of my brother. I don't use a limit order for entries. All right, I use market executions. Have you not been following this class, or is your network bad? I use market execution. So if price engineers liquidity inside my fair value gap, wherever it takes out that engineered liquidity low, that's where I'm entering. Whether it is in the middle or it's from the start, I'm taking my entry. All right. Sometimes when your fair value gap is too wide, price tends to mitigate up to half before it plays. Okay, but if your fair value gap is not wide, don't be doing 50%. And even if your fair value gap is wide, Sometimes price can just tap in small and leave. That's why I always appreciate when price engineers liquidity inside my fair value gap. It can help me reduce my risk because it engineered it inside. I always like it when it engineer it inside rather than close to it. So what was I saying? Yeah, the mitigation block thing. So let's check EU and see if there's any mitigation block play. Of course, EU is supposed to have a lot, especially EU have been on the downtrend since how many months? It's now that I just try to. Okay, here now, for example, look at this. Okay, just broken resistance turn to support. If you carry this to, if I all the time that you will carry to Twitter, that's when you will see a lot of book already. Support break, turn resistance break, turn to support. That's mitigation block. Okay. So if you are buying, maybe you are in a bullish trend and price breaks the resistance, and then price comes to the support, maybe you retrace back to the support. That is basically, and then it start going back, or that's basically price using mitigation blocks. It's just that we smart money trader, we don't want to call it support and resistance. That's why we change it to, I mean, support on resistance on support. That's why we change it to mitigation blocks. There must always be somewhere, sorry, there must always be a mitigation block. In fact, most times when price is heading towards a target and is very aggressive, price can use mitigation block a lot. All right, but this is just like I'm just telling you guys about it. Experience will teach you guys how to discern. Everything I'm teaching right now, experience is going to teach you guys. The market will teach you guys your own, like your, I mean, to discern your own, to make your own decision and stuff like that. I cannot make decisions for you. I can only tell you, okay, this is what it is. If you want to be trading everything, if you want to trade, find something and just trade, like this is what I want to be trading with. This is the strategy. I like this strategy. I want to be trading with it. Good. If you support a resistance that will work for you, why not? Okay. Nobody really cares how you make the money. Once you make the money, people will want to learn what you use. Okay. So don't feel like maybe because you're using support and resistance, you're using patterns. You're not using those big grammars. Say you are now less. If you make money tomorrow, people that are trading smart money, they will come and learn your support and resistance as if they've never learned it before. So focus on what is important. What is important is getting a working strategy for yourself, no matter what it is. It can be the funniest, of them all, but it's taking you to the bank every week. It's footing your bills. So people will come and learn too, so that it will foot their bills. They will not laugh. They can only laugh because you are still trying to find what is working for you now. By the time you find it, so be encouraged. Whatever strategy you are using, and it's printing for you, please hold on to it. All right. The reason why I learned this and that are because none of them was actually working. So I found structural liquidity and entry, and turtle soup came. I did not learn key levels that is even everywhere. So I've not learned a single thing about it. CROT came, I did not learn. Okay, because structural liquidity and entry is paying my bills. So why do I need to disturb myself? The reason why people will be jumping from one strategy to another is because the strategy is not paying them, or they want to belong. Me, I don't want to belong to anything. I learned trading to take care of myself and my family, not to be impressing anyone. All right. So focus on what is important, please. Okay, that is all for tonight's class. In our next class, we'll be treating our first entry model. Okay, so I will send the recording to the group so that we can watch it again and get the idea of what we talked about tonight. All right, good night, guys.